Let's move right on then and put the spotlight on Tata Chemicals as well. We've got Mr. R Mukundan, who's the Managing Director and CEO of Tata Chemicals, now joining in to talk about the earnings. Good to have you on board. To begin with, your performance has been impacted due to the weak demand trends. We spoke with your peers like GHCL, and they said that they expect the European and US markets to recover after 2 to 3 quarters only. Is this something that you're experiencing as well?
See, let me just say this. The challenge for demand is only from Western Europe. There is no demand issue in North America. In fact, North America is fairly stable and positive. Container sector in North America may have been little impacted, but certainly the overall demand there is stable. The uh, 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 the Latin American market has shown an early sign of some reduction because of the lithium sector, but otherwise that also has been. And China has grown at about 4 to 5% broadly. So really, the weakness is coming from Western Europe. That weakness in Western Europe has meant that their demand has fallen by 1 million ton on a base of 6 million ton. And that million ton additional volume, which is there, which broadly, approximately, I think about 600,000 ton was being exported from Turkey to Western Europe, that has moved to other parts of the world, which has led to the price pressure in other parts, including in India and China. So the biggest increase has come because of the Turkish material moving out of Western Europe because Western Europe demand is not there. Now, if you ask me what is the situation in Western Europe, we think Western Europe will continue to face downward bias at least for next 2 3 quarters until rationalization of capacities and rationalization of operations happens there, which means some people have to cut back. One or two people have announced some bit of cutback in their operations, which are very, very high cost operations. They are actually unviable today at these input cost and price structures. So this will play out over some period of time. But the whole issue which we are facing in the industry is an outcome of the Western European situation.
Right. So, how do you expect soda ash prices to behave in the near term considering the overcapacities?
In terms of pricing, the Indian soda ash prices and the prices worldwide have almost hit the bottom. I don't. It's been fairly flat for quite some time, and will continue from here, or it's going to be a slow climb upward as capacities begins to rationalize. If you look at U.S. market, our contract for next year domestic is more or less stable, and we expect that there'll be no issue. The Indian market prices are also stable. The main issue which we will face going forward next year is going to be in terms of exports, where compared to the pricing which we got in the export markets this year, we would see this year at least $100 reduction. This is mainly out of exports coming out of US. And in Europe, we have an operation in UK. Similar to most people, there is going to be a compression in margin of at least 100 pounds per ton. Uh, those are the two pressure points. For us, our capacity in Western Europe is smaller. It is about 10% of our overall, I think 8% of our overall capacity. So our pressure point on that piece is much less. Our major pressure point is our exports out of Europe, where because we export close to 45% of the US production to different parts of the world.
Right. And given that your margins have been impacted, they've fallen from the recent peak of 25% last year, currently hovering around 15%. When do you see your margins recovering or going back to those 25% levels?
So if you see medium and long term, we believe that margins have to go back to the normal expected range of about 40%. But in the immediate term, when you see 2 to 3 quarters, we do expect it is going to be either flat or a slow climb up. So I don't want to put a time to it because the Western European situation we need to continue to monitor and continue to be vigilant and be responsive as that situation changes. So if capacity is there, rationalize, and people do optimization of their production, I think the pricing would stabilize. and we have to wait for that to sort of happen.
Right. Last year the Tata Group had signed an MOU with the Gujarat government to set up a Gigafactory for lithium-ion batteries. What is the progress on that, and what will be Tata Chemicals' contribution to this?
So our group company, Agratas, is the one which will be making EV batteries. We are engaging with them to be supplying various chemicals they would need. We would be supplier of chemicals into the battery segment, and subject to us meeting their requirements and their standards, I'm sure that we will make headway there. As and when we have anything specific, we would speak about it. But I think the entire investment is going to come through a company called Agratas, which has been promoted by the Tata Group.
Right, and what's your guidance? What's the outlook for FY25? Could it be better than FY24, at least in terms of your parameters for growth and margins?
So I don't want to give a forward-looking statement on that account, but I would certainly say the domestic markets where we are present, where we have strong presence, have more or less stabilized, and I think they would continue to be range bound in the similar way. In terms of exports out of US and out of Kenya, the next full year would see a recovery up from the $100 dip, which we will see in the next quarter. And how fast the recovery is, we need to wait and watch. So what we have committed to is we'll stay close to customers, we'll be agile in our responsiveness, and thirdly, we would continue with our medium-term capital investment.
Right, Mr. Mukundan, great to have you on ET Now today. Thanks for highlighting all your earnings.